All right, so in today's video, or in this video, we're going to be talking about ES in the price action on this thing today. So I'm going to navigate first. I'm going to navigate over into my free Discord chat room. A link to my free Discord chat room is in the video description. So we're going to go there first, and we're going to talk about the setup that I saw on this morning. So you can see I posted today at 8:07 a.m. Eastern time. Possible short scalp play here on ES. Okay. What you need to understand, or what the beginners need to understand, when I say short, that means that I'm betting against something. Just how you buy something anticipating higher prices. When you short, you're anticipating lower prices. So that's why I said possible short scalp play here on ES. And scalp, that just means that we're looking for a small move, a very small move on it. Okay. And why was I just pointing out a scalp play on it? Well, there's no higher time frame level for one. So I said strictly on the lower time frame. That's what LTF stands for, lower time frame. HTF, higher time frame. Owed low resistance and clean equal lows was a fair value gap draw below. It's about 5 handles for a PT. If it cleans it out, that's 5 minutes. Okay, so it is important to note that this is a counter trend setup. Okay, the overall trend on ES at the moment is bullish. Overall higher time frame trend on ES is bullish. Okay, but I posted this for your studying purposes. I posted this because some of you still like the counter trend trade, and that was a setup. And we're going to break down how you could have played this setup. We're going to go into it step by step, what I saw on this, right? So let's break it down. So this morning, let's start from the jump. Let's start from the beginning. Let's talk about, because let's go to New York time, or let's go to New York, or let's go to midnight New York, start of a new day. So did we have a Judas swing this morning during London session? Did we have a Judas swing this morning? No, we didn't really have any Judas swing. Okay, we didn't have any key liquidity grab this morning. Did we grab Asian lows? Nope, we didn't grab Asian lows. We actually had really clean lows in there. See that? Look at my cursor. See those clean lows? Asian session lows, very clean lows that was not tagged during a London session. That's bearish. Okay, price typically doesn't want to leave clean lows like that. So what ended up happening coming into London session, price chopped around a little bit, and then boom, we explode out of that range. Coming into 7 o'clock. So did we take any key liquidity pull on this move up higher? We took out previous day's highs. So I want you to think of it like this. Price is always looking for that next key liquidity pull. Price moves in the direction of least resistance. So once we take out that liquidity pool, we purge that liquidity out of the marketplace. It's bullish, sure, it's still bullish, but it's gonna seek that next key liquidity pool. That's how I want you to think about it. Remember, what have we already established? We've already established that during London session this morning, we didn't have any key liquidity grab. When I say key liquidity grab, like previous session liquidity grab, it didn't take Asian liquidity. It just ripped up from the jump, right? And it took out this liquidity. That was the liquidity that it was seeking. That was the liquidity that it was gunning after. And it took that liquidity out of the marketplace. Boom. Right? And we had this big, strong move up higher. Okay. So while we're doing this, we're in what? We're in a premium marketplace. We took out this high. It's bullish. It has a lot of strength towards it, but it's in a premium marketplace. It's short-term expensive. And especially considering the fact that we didn't take out these clean lows this morning. It's short-term expensive. Okay. So when did I see the short play? Well, on the 1 hour chart, we had this form. You see what I'm eyeing? Look at my cursor. I want you to say it. What is that? That was created. That is a bullish fair value gap. So you might be thinking, okay, you said bullish fair value gap, bullish imbalance, big displacement to the upside. That's bullish, Mike, right? That's bullish. Well, you got to be careful. Not all fair value gaps are good. Not all fair value gaps are good plays to buy off of, because of the fact that what I just said a second ago. The fact that we did not take out these clean lows right here. We didn't take out that liquidity. We took out previous day's highs. It's going to seek that next liquidity pool. Now, I did post in chat this morning. I'm not going to skip over that. I posted these levels as well. See what I said here? ES 15-minute levels of support. Not higher time frame levels, but still levels of support. Could catch a nice scalp play here. So I don't want any of you believing that I thought this was going to be the bottom. I did not. That's why I said a nice scalp play. Nice scalp play, meaning a very small move. Because I knew that liquidity, I knew those equal lows are down there. But I figured, hey, we could probably get a nice little pop off these levels because that is support. Okay, that is support right there. But I didn't think it was going to be the bottom. I didn't think it was just going to come down into these levels of support down here and just turn and rip up higher. I didn't think that was going to happen because we had this liquidity down here resting that it wanted to take. So that's why I was not confident in this bullish fair value gap holding and then ripping up higher. It was a draw on liquidity. That is a draw on liquidity. That was why it just added to the conviction on that short, or on that short setup, because this little pocket of price action right here was not efficiently delivered. It is an imbalance. Okay. Price does not like to leave areas imbalance. It wants to rebalance that price action. Okay. So that's one thing. We're in a premium. We took out a key liquidity pool. We're in a premium marketplace. Now we got an imbalance created. Okay. So this portion of price not efficiently delivered, and we had a swing high level formed, which is bearish as well. Okay. Because in the simplest forms, it just means price is topping out. That's exactly what it means. Swing high, it's topping out. That's bearish. Okay. Okay. Of course, you can't just short every single swing high you see. You can't just buy every swing low you see. I don't believe it's an effective way to trade but it is effective when you add it in conjunction with other factors like we're talking about right now, like the fair value gap, the fact that it's in a premium marketplace, and now we got a swing high formed. And now what are we going to do? We're going to utilize our lower time frame for that confirmation. And if you watched my video on my YouTube on counter trend trading, I have a video on counter trend trading. This is straight out of that playbook. It's straight out of that playbook. It's the same exact deal, same exact setup. Why? Because price repeats. So we're in a premium. Remember, we're in a premium. We have that fair value gap. But now what do we want on the lower time frame chart? We want that shift in market structure. We want to be trading with that lower time frame market structure. We want it backing us. We want it in our favor. Okay. We've already concluded that we're fighting the higher time frame trend. But say you're okay with that. You say, all right, I'm all right with that. I'm cool with that. I'm just going to play these price ranges. I'm going to play these price ranges, and I'm going to trade price within these discount and premium price ranges, right? So it's important that you are utilizing a smaller time frame to do so. And that's what I posted this morning in chat. I posted a 5-minute chart of ES right here. So where is the shift in market structure? This is where we were, look at my cursor. I want you to follow my cursor. We were trending up, trending up, trending up. We're still strong. Listen to price, what it's telling you. It's showing no signs of weakness at the moment. It's bullish. It's in a premium marketplace, but also our lower time frame is still bullish as well. We need that lower time frame confirmation. Okay, what happens? We pull back, look at my cursor, follow my cursor. We put in a swing low. That's a swing low level right there. Follow my cursor. Lowest low in the middle, a higher low on the left, a higher low on the right. That makes that a swing low. And then what happens right after that swing low is formed? Boom, you get a nice big explosive move through that level. That is a high probability market structure shift. Again, video on my YouTube, search it. High probability market structure shift. That's the criteria. We had a high probability market. So high probability market structure shift being we have our bearish fair value gap right here. Let's just mark that as well. There's our fair value gap. And we have a level of resistance being that old low inside of the fair value gap. And if you watch my series on support and resistance, you will know that whenever we have that criteria in old low inside of a fair value gap, that level is usually very sensitive. It's a very sensitive price point. So you kind of see how all of this is starting to add up here now, how we have all these different things in conjunction. Sure, higher time frame is bullish, but we just took out previous day's highs, key liquidity pool. We didn't have any major Judas swing this morning, taking out previous session liquidity. We're in a premium market on that higher time frame. Bullish, but in a premium market. So short-term expensive. And now on our smaller time frame 5-minute chart, we have a shift in market structure. We have a displacement to the downside. We have that lower time frame market structure backing us in a higher time frame premium. That's key. So, and then we have this level right here. Do we want to buy as it's selling off like this? No, we want to grab it as it trades back into a premium. Again, we want to be selling in a premium. We want to be buying in a discount. Take this swing level right here prior to that displacement to the low. We traded up into a premium and even gave Key 61% retracement as well, which is my favorite, 61% retracement. We gave it, okay? So it traded up into a premium. It didn't do it on this first move. So this first move, we tapped up into the fair value gap right here. and then it sold off, that was a little fake move. But then what did price end up doing? It came back up. It took out these buy stops, tested that level. That's where it was on my radar, because we also had something else now. Look right here. What are these? Those are equal lows. Price does not like to leave clean levels like that. That is a super clean level. And when we add that, again, it's not smart just to go in and short something just because you see clean lows, or go in and buy something just because you see clean highs. You need other things in conjunction with it, because kind of think of it, it's like a puzzle. You got to have all these different pieces. And then when you have all these different pieces coming together, it makes a beautiful picture, right? Those pieces being, again, premium market on the higher time frame. We have a swing high level formed. We have a displacement market structure shift on the lower time frame. We have a fair value gap imbalance right here, which is a drawn liquidity. We have clean equal lows. And then we just took out buy stops as well. We're testing a level of resistance. I mean, boom, 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 boom. Look at all this stuff that's adding up. You have overwhelmingly more stuff going in your favor than against you. And you are counter trend trading. That's a minus. Of course, it's best to trade with a higher time frame trend. But even with that, look at all this stuff you got going in your favor. Look at all this. And then look at that huge dump that occurred as a result. So that's what ended up happening. Where would your stop on something like this be if you were to play that setup? A good place to keep a stop, or there's a couple places. You could keep it above the fair value gap. That is a valid stop out point. So right above this high, if you look at my cursor, above the fair value gap high, that is a valid stop out point that you could use. Okay. Or you could, above this high right here, but then the risk reward on that isn't the greatest if you're tagging these lows. If you want to be a little bit more aggressive, sure, you could, but this is a valid stop out point that I would personally go with above that fair value gap right there. Looking for these lows to get cleaned out, which it did, and then it drew down into that imbalance. I thought it was going to have more action because it didn't respect these levels at all. Those levels that I posted earlier in Discord, those owed highs, I thought it was going to give more of a bounce there. I did, but price doesn't got to do anything he doesn't want to do. And that's what some of you need to understand. Okay. You know, I'm not trying to put anybody down, but I see it sometimes in chat with some of you guys. Some of you guys are like, this thing has got to sell off. It's got to go. I mean, there's no reason for this thing to be moving up. I've been seeing that the past couple of days. Or I'm not trying to put you down, but price doesn't got to do anything it doesn't want to do. You need to understand that, and you need to really grasp that. This thing, yeah, it had a big dump. It did have a nice dump this morning. It had a nice big displacement to the downside. It didn't have to do that. It could have ran for the rest of the week. It could have kept running up the rest of the week. Price does not have to do anything it does not want to do. Understand that. Write it down. Repeat it to yourself 1,000 times if you got to. Tattoo it if you got to, right? It's going to do what it needs to do. All I do every single day in here in chat is I post levels, I post my analysis, and I observe how price reacts around these levels. That is what you do, okay? I don't trade what I think, I trade what I see, okay? So I have my levels outlined, and then my job is to see how price reacts around those levels. I let price tell me what it wants to do. I had these levels marked, sure. I had these levels marked, and then some people, if their analysis gets destroyed and there's no respect for it, they start to feel down on themselves. They start to feel like they're a bad trader. Nope, your analysis or your levels just didn't hold up. It's that simple. I have no ego attached to my levels. All I'm doing is waiting, seeing how they react, executing. That's it. If I don't get a reaction, there's no trade. There's no trade if I don't get a reaction. Okay. But again, I didn't figure that this was going to be the absolute bottom because of the reasons that I've already mentioned in this video. But I thought it would give a little bit of a better scalp play off that area. But yeah, that was what ended up happening on it. Also, another key tip here, and one for the notes. Whenever a fair value gap is not respected, so like, for example, this bullish fair value gap we have right here, remember this is on the 15-minute, just so nobody's not lost. Well, actually, no, it's that 1 hour chart, my mistake. The 1 hour chart. So you remember this 1 hour bullish fair value gap we marked right here? Important one for the notes is, and I've gone over it before, whenever you have a fair value gap that is not respected, think of it the same way that we think of support and resistance. Support when broken becomes resistance, right? Resistance when broken becomes support. Fair value gap broken, think of it like support broken. Many times you will see that level become resistance. That's another important one for the notes. Okay. And then we saw that here. That's where we ended up having that bounce this morning. It found its bottom right here after cleaning out that sell side liquidity. It traded back up It traded back up into a short-term premium within this price range, a short-term premium within that price range. It tested that fair value gap, tested old lows, found resistance, boom, sold off. Same deal, traded back up into a premium, tapped up into the fair value gap right here, boom, sold off. And now it's just consistently been selling off lower. It's a really clean, pretty clean price action actually. Pretty clean price action. So what do I think is going to happen next? Some of you might be thinking, okay, cool. What do you think is going to happen next, Mike? So I don't have a crystal ball, but like I just told you guys, like I was just beating through your head, hopefully you grasp it, is all we can do is sit our levels and see how price reacts. Now we have a key level of resistance. We have a higher time frame level of resistance, which is ideal. That's what I like. I like those higher time frame levels of resistance. Right here. See that? That is a swing low level right there. We're going to mark that swing low level. That is a level of resistance. And then once this 4-hour candle closes, it'll be inside that fair value gap as well. And it, as you guys know, as I went over a million times, whenever we have a level inside of the fair value gap like that, high probability, very sensitive price point. That is a level that you want to keep a very close eye on. Okay. You could play the 4-hour price structure. Again, I've stressed the importance of using lower time frame confirmation, but there's nothing wrong with, if you want to, you could short as it comes up into that if that's your setup. There's nothing wrong with that, but your stop, a smart place to put your stop would have to be above that high if you're playing that structure. Okay, again, don't force your risk reward ratio on the chart, play the market structure. And if you're playing that 4-hour market structure, a good stop out point would be that high. Then you could look for it to possibly tag these lows, pay yourself, and draw down into this imbalance, which is likely where it's headed. Let me draw that on there real quick for you so you can see it. This is an imbalance that price is drawn into at the moment. See that? That 4-hour imbalance. This portion of price action not efficiently delivered. And now price has tipped its hand to you. It tipped its hand, okay? Again, a lot of you guys that saw this run up, you're thinking it's got to sell off, it's got to sell off, it's got to sell off. Wait for price to tip its hand to you. Wait for it to show you that it wants to sell off. Quit trying to force your analysis on price. It's going to do what it wants to do. It doesn't care how much you want it to bend. It does not care. It's going to do what it wants to do. Set your levels, wait. That's what you do. That's the way to do it. So we have this fair value gap. We have price tipping at 10 with a shift in market structure. We have a higher time frame level. You could short up, and that is a valid short play now since it's confirmed. But a smarter play would be to utilize like smaller time frames and wait for price to trade up into that level of resistance, which is right here, these old lows. Wait for it to trade up into that level of resistance. And what do you think you want to see next on your lower time frame? Boom, you want to see a shift in market structure to the downside, just like we had up here, but on the lower time frame chart. And then you can start looking for lower objectives like these lows and for it to draw down into this imbalance. Okay, you use that smaller time frame to be safer, sure, but also to minimize risk and to maximize reward. That's why we do it. So that's my thoughts on it at the moment. I am bearish at the moment. Now that we had that crack this morning, I think that was price tipping its hand to us. I could be wrong. And if I'm wrong, I'm perfectly fine with that. I have no attachment with it. I have no attachment to price because overall, higher time frame chart's still bullish, but it's due for a retracement. It's in a premium marketplace. We did tap into this daily bullish fair value gap right here, but I'm not convinced. That's why we're bouncing at the moment, but I think it's going to be a very short-lived bounce. I think we're going to bounce. We're going to rebalance that price action, and then we're going to continue lower down into that fair value gap that I noted. And we also have some higher time frame levels of support down here. As you can see, these old highs, you got some pretty nice support down there that price could find its bottom at. Okay, so what we're going to do is we're going to take this low. Where would price enter a discount marketplace or below 50% equilibrium, that price range? There's 50%. Look at my cursor. That is where most likely price is going to want to trade down into this area here pretty soon. And it's going to want to test these higher time frame levels of support. It doesn't have to. It does not have to, but that's more than likely. And we have this imbalance down here below this one. We see this daily imbalance right here. Let me note it for you real quick. See that? That's a daily fair value gap. That's a draw on liquidity. Okay. And now we had this shift right here. I think that's price tipping its hand that it's about to trade down into that daily discount. That's what I believe what we're seeing play out right here at the current moment. So that's where you need to keep your focus. Hopefully you guys found this useful, and I'll catch you later.